Are your gifts to investors allowable for tax purposes? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Do you send gifts to your investors, your private loan providers? Do you want to keep them happy? Are you sending them maybe a box of chocolates or a bottle of wine or something maybe at Christmas or on their birthday, which just gives and builds that relationship with that individual? What are the tax implications? What are the implications for your company? Are they allowable expenses or can you put them in your company? Well, yes, you can put them as expenses in your company. And if that's the case, what I would suggest is making sure you claim all of those expenses, whether it be for the bottle of wine, chocolates, whatever it may be. If you're paying through a personal card, that you keep the receipts and you complete an expense claim form. If you're not sure what an expense claim form is, check out the video on expense claim forms and how to go about claiming them. And then you can reimburse yourself from the business account, from the company, to get that money that you spent personally back. This then leads us on to the question of whether it is allowable for tax. Now, unfortunately, in this circumstance, this falls under the entertaining rules, and on that basis, it is not going to be allowable for tax purposes, which means you're not going to get a corporation tax reduction. It's not going to reduce your company tax bill. Now, that doesn't mean to say that you shouldn't be claiming it through your company, and I definitely advocate for putting that expense through your company because it's not a personal expense. However, unfortunately, we're not going to necessarily be seeing those corporation tax benefits by spending the money on this type of expense. One of the key takeaways here is if you are getting hampers, if you're buying bottles of wine, chocolates, or different things for your investors, then that is great because it may be just that building that rapport, building that trust, getting this relationship into a good state of affairs so that you've got a long working relationship with those individuals. However, you are not going to be allowed to claim that for tax purposes. So the question here is just making sure you're managing those costs so you don't find that you're spending thousands upon thousands on something you're not going to be getting tax relief for. So if you don't get tax relief, it needs to be beneficial in some other way, that they are remaining investors for a longer period of time, or they may be connecting you with other people who could invest into your business. So make sure you're just looking at the cost benefit analysis on this type of expense so you are getting a benefit from incurring these expenses. Hopefully today you've discovered all about if you're giving any gifts to your investors or private loan providers. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.